Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand the latest cues from the D Street, starting from the benchmark index moves to sectoral action and all the stocks that are buzzing in trade. What we'll also focus on in deciphering what should be the ideal strategy for you as retail investors on the big IT bellwether names like TCS, post the earnings, why are the shares sulking at this point in time and what should be the strategy there. Infosys, what are the expectations and how should you be looking at the stock ahead of the earnings as well. What we'll also discuss is why the new age technology space is once again garnering investors' interest and brokerage houses are also giving a big thumbs up to stocks like Zomato. So how should you be positioned there? All of these things will be discussed all across this show, so do stay tuned over the next 15 minutes with us. First up, a quick look as to how the markets are trading at this point in time. The Nifty flattish with a positive bias. 19,818 is the level at which the Nifty is trading at, but above that 19,800 mark, so that is a bit positive. The Nifty Bank is just about 0.2% higher in trade. About 94 points of a gain can be seen. Sectorally speaking, most of the sectors are actually trading in the positive zone, with oil and gas leading the space today, and of course metals, autos, all of them also supporting the indices and the sentiments. The broader markets also, the mid and the small cap 100 indices up about 0.5% to 0.6% in trade. So these are the other movers in trade today. When we look at the realty space and the IT space, these are the two sectors that are declining in action. Of course, IT stocks led by the downside from TCS today, and as the heavyweight counter is pointing towards the downside, the realty space is seeing some profit being taken off the table too. Now, when we talk about the F&O space, you do have the metals, mining kind of companies, steel companies really topping the charts. NMDC, for example, that's up by 5%. Nalco, for example, that's up by 5% as well. Apart from this, you're also seeing some move come in on the oil and gas majors like HPCL, that's in focus today. GAIL is in focus again today. So this is the entire space that is seeing some kind of buying action being taken place. Even on the Nifty, it's BPCL as the top gainer in trade today, followed by Coal India. You do have Grasim again topping the charts yet again for the second day in a row. You do have the power names like Power Grid and NTPC coming back in action, and some of the metal names like JSW Steel, Tata Steel also in favor of the bulls today. On the downside, however, when we talk about the Nifty losers, like I pointed out, TCS, one of the top losers, really contributing to the downside or putting pressure in the markets. It's 1.5% down in trade. Cipla, HCL Technology is also ahead of its earnings, is down in trade. Tech Mahindra is down in trade. Infosys also down in trade ahead of earnings. So it's the big IT majors that are trending down in trade. Time to welcome our guest on the show. Mr. Hemang Jani joins in, market expert. Welcome, sir, and thank you so much for taking the time out. First up, your quick comment on the markets first, and then we will delve into the details, sir.
Hello. Markets continue to remain quite resilient, and what is interesting to see is that the US markets too have actually shown a very remarkable recovery despite the concerns on the interest rates. And there, the bond yields have actually corrected by almost about 15 basis points. So, given the domestic macros being slightly better, flow of money into equity by retail investors, and also the fact that the expectations from the earnings season are, getting a little positive. So we think that the markets continue to remain quite resilient with very small correction here and there. I think we should have a positive view from a medium to long term perspective and continue to buy into the sectors wherever you see earnings visibility.
Okay, straight on to the IT pack then, sir. Of course, I have to take a comment on TCS. The stock is under pressure, down 1.5%. Could you reason out for all our viewers why the shares are down? What is it in the earnings that the street has not liked?
Yeah, so TCS, the numbers were slightly muted and even the expectations were not very high. And for last about 3 quarters, the revenue growth is flattish, and which is what the street maybe does not like. And the global challenges, the macro economic challenges, they persist. So there is a little bit of subdued movement because of that. However, we think that the deal pipeline for TCS continues to be good. There is a margin improvement, almost about 80 to 100 basis points. And there is a strong sense that even in US and other markets, the technology spend is getting better. The layoffs which were taking place now, the same companies have started hiring people. So the worst in terms of tech spend is over, and TCS has handled that situation well. So our view on TCS continues to be quite positive, though the upside may not be very significant. Maybe we have to see about, let's say, 15 to 18% kind of an upside is what we are looking at.
Hmm.
But clearly, these are the levels where one should, look to buy into TCS rather than
Okay, buy TCS rather than sell. Even on the buyback, as per your expectations, did the 17,000 odd crore rupees announcement came in favor? And what would you advise investors who may only be looking for an upside from this buyback?
buyback size is okay, though it is slightly less compared to previous buyback, but I don't think that really matters. I think the retail investors would have a decent amount of acceptance, and the current price and the buyback price almost got 4,100. There's enough gap. I think almost about, let's say, 12% or 13%, which is not bad. So surely we should tender the shares, the buyback, and hope for a slightly better acceptance ratio.
Okay, you should tender the shares in this buyback again. Now, let's shift focus to Infosys then. What are your big expectations from the second largest IT firm this time around? The key monitorables that you would be looking at, and what will D Street be looking at in terms of the commentary from the management? Because clearly, what we have seen is that IT firm has really not performed well on the stock market front too. Because when we compare, the Infosys shares have slipped about 2% this year, as against 11% surge on TCS and a 20% jump in HCL Technologies. And that was thanks to the downgrading of the guidance that Infosys had done for FY24 in the previous quarter. The big question then is, can Infosys really deliver? How would you be looking at this stock then, sir?
In both again, previous quarter, there was a major disappointment. So versus that, we expect slightly better numbers this quarter, almost about 0.7% kind of dollar revenue growth. Margins are also going to be quite stable. And the deal pipeline is what we are really, looking at very closely. And key markets, US, some of the UK and European markets, how exactly the outlook is looking like in terms of the deal pipeline is what we have to watch out for. But clearly, the outlook, even on Infosys, is positive. There might be a little bit of subdued movement post numbers because, anyway, the market was not expecting anything great. But we should be buying into Infosys or, for that matter, HCL Tech also at this point of time.
Okay, so HCL Tech, sir, what are your key expectations? Do you think the company can definitely report sharp recovery in both revenue and profits?
So yes, within the large cap IT services company, HCL Tech will deliver the best growth, about 3% quarter on quarter, and with some degree of improvement in margins too. So we think that HCL Tech is even more attractive in terms of valuations with slightly better growth. So within the top three companies, number one pick would be HCL Tech, followed by TCS and then Infosys.
Okay, got that. So that's as far as the big IT earnings are concerned, and how should you be positioned on all the top three, TCS, Infosys and HCL Tech as well. And we'll continue to delve deeper through the course of this day as well to understand more about what are the big expectations on the earnings front too. But let's now also shift focus to a new age technology space that a lot of viewers always get excited about and are interested in. And why not? We are actually seeing Zomato now gaining for the third day in a row, and the stock is up 2.3% today at 111 rupees kind of a level. It's already hit a 52-week high level, and the brokerage houses are also coming out with bullish reports. They are looking at the stock price of even 160 rupees going forward from here. Your thoughts on Zomato, sir? And do you think that the kind of bullish reports that we are getting can justify the kind of move that we are seeing on the stock market front as well as on the fundamental front?
We have been positive on Zomato for a long time now, and even when it has gone up from almost about 50 to about 115 or thereabouts, the fact of the matter is that when you look at each of the business verticals, whether it is the pure standalone food delivery business of Zomato, which has already turned operationally profitable, the quick commerce part, there is an expectation that from the second quarter of FY24, this will also become profitable. And the sense one is getting is that the contribution margin is going to improve significantly. So I think all in all, the data points are looking quite positive, and we think that there is a case for a 15 to 20% kind of an upside even from current price points. And if on a particular day you see the market correcting or Zomato stock correcting by about 5 to 10%, that would be an ideal level to enter into Zomato for a much larger upside.
Okay, got that. Anything else apart from Zomato from the new age tech space that you're bullish on ahead of earnings this time too, sir?
Really, Paytm is something that we've been liking, and there is also a possibility of inclusion in the MSCI index. Their weight may go up, and in terms of fundamentals, I think month on month you're seeing improvement in the user base, even on the loan book and the new product launches which they are doing. The wealth and the advisory side of that. That there the company is doing exceptionally well. So Paytm again is something that we like for a 15 to 20% kind of an upside.
Okay, 10 to 15% upside on Paytm right here. Well, many thanks, Mr. Jani, then for being with us on the show and discussing all across various topics that we've discussed, IT, new age tech and markets overall, and the strategies that you've recommended. Good to speak with you again. Let's get back to the markets now and see how are they placed. Flattish trade still being seen. And of course, it's the IT majors that are sulking, and that is creating a limit, the upside limit for the, or a cap for the upside in the markets today. But it's the energy basket that is also looking very interesting. So through the course of this day, we will also increasingly focus on what is really happening in the oil and gas space, and is this the space that you should be now looking at as well. Look at the Nifty Energy Index. It's up by 0.6% again today, and the oil and gas index is up by 0.8% as well. The metals are up by 0.9%. So the commodity based spaces are now also looking incrementally positive. Is this a trend that you should follow? Is something that we will continue to watch out for. What you should also get ready is for our special series, that's Market Masters, where our market gurus reveal their investment strategies for a winning portfolio. So you can join us on the coming Monday, that's October 16th, with Vijay Kedia, Managing Director of ICICI Securities, to get his market insights and in-depth market analysis. You can also send us your queries on this number that's flashing on your screens, that's 730-308-0488, and these questions will be taken live.